Today we are going to see this situation in QuickBooks. The situation is the business takes advance payment from the customer. 50% advance payment the business takes. The customer will not pay the business without an invoice, so there should be an invoice whenever the advance payment is going to be done or made. There should be an invoice. The business will take the full payment at the time of delivery through another invoice, and the final payment need to shown. Okay, the initial payment, the 50%, because this is definitely not income. This is liability. So this definitely need to be shown as liability, and without any journal, automatic, like only you will create invoice, but it will be shown as liability. When the final payment is received or the final invoice is generated, then everything will be treated as income. Okay, so this is what we're going to see here. So this is the customer. Okay, I'll show you that. Okay, for this business, okay, now this business, like if we go to the reports and the balance sheet, okay, so there is nothing like all dates, run report, there is nothing, no transaction. Back to the report summary. Now if I go to the back to the report list, so there is if even if I write like trial balance and the trial balance of all dates, so there is nothing, no data in this QuickBooks. Okay, so the first thing we're going to do, okay, initially, definitely you need to have item, you need to have a product and services, like you need to have an item here under product and services as and then yeah, definitely we have a product and service advance received. And if you see that, okay, this is what we need to have, and here we have the unearned revenue, the liability account mapped for this product and services. Okay, this is the first thing that you need to do. You need to have this. Once you have that, and then you're going to the sales, the customer center. So we have the customer Brandon Taylor, and we're going to create the invoice, the initial invoice that we're going to create. Okay, and that invoice, we're going to create this invoice, and you can see 1001 because actually I have created the invoice before. Now I'll say 10001, and then this is advance one. Okay, so like for this one, advance one, this is manually I'm putting advance one, and from here I'm choosing advance received. Okay, advance received, or okay, so like advance for the advance for XYZ. Okay, advance for XYZ, and quantity is 1. Okay, I'm going to write 5,000. That's what the situation is telling us. Okay, 5,000. And so I'm creating this invoice. Okay, I'm going to create this invoice. So save and close, save. Okay, I'm going to create this invoice, and let's say that the customer pays immediately. So I'm going to, oh sorry, so the invoice date is not correct. So the invoice, the situation told us that, okay, the invoice is March 2019. So the invoice is actually March 2019. Okay, so this is actually the invoice. So the invoice is this is saved, and the invoice is March 2019. So now the second invoice, okay, before the second invoice, let's say the customer pay this invoice immediately. So I'm going to receive the payment. Okay, before receiving the payment, what we have? So if the balance sheet, okay, how the balance sheet looks like. So accounts receivable, the balance is looking like, okay, the account we have account, oh, this is the trial balance. We have accounts receivable. Okay, so uh, trial balance. Okay, I'll show you the balance sheet, then it's better. So I'll show the balance sheet, that how the balance sheet is looking like, and also I'll show you the income statement. We have an invoice. Now you're thinking that, okay, we have created an invoice, so there should be $5,000 income, but actually I'll show you that there is nothing in income. So we have under this balance sheet, now we have all the dates, run the report. So in the balance sheet we see we have accounts receivable $5,000 because we have not received that yet, and we have unearned revenue of $5,000. Okay, that's the liability, because okay, so that's the liability. And then here I'll show you uh, the profit and loss is actually we have nothing in profit and loss, all dates. So there is nothing in profit and loss. Okay, now because I told you that okay, this customer paid immediately, so the payment was made on March 2019, the first of March 2019. If the payment was made immediately, then what is going to happen, so that is the invoice date, and then the customer is paying immediately and we are receiving this payment in the checking account. So 7 close, we are receiving this payment. So now what we have, the balance sheet is looking like, okay, so the balance sheet is looking like, yeah, you see the checking account, we have the $5,000 in the checking account, the total asset we have is $5,000, and also this is our liability. So we don't have the total, the net equity is zero, so we do nothing we have. And the profit and loss, we still have the profit and loss is the same. Okay, now going back to the customer, and then we are going to create another invoice, and that invoice, yeah, so this is the invoice advance 2, yeah, and so as per the situation, so we are receiving another invoice, another advance on April. So as we are receiving that another invoice, another advance in April 1, let's say that April 1. Okay, and this is advance, so I'm going to put that, and in the description I'm going to put advance for XYZ, like that product. Okay, okay, and then another advance, we're going to receive $5,000. So this is happening, this is going there. Okay, we save this, and then we're going to receive the payment immediately. So like this was March and April, let's say April, immediately they paid us, so in the checking account. Okay, now look at the profit and loss. Still there is nothing in the profit and loss, and the balance sheet, it says $10,000. We have 10,000 in the checking account, and we have this 10,000 as liability. Okay, now we are delivering the product. Okay, now we are delivering the product. So as we are delivering the product in, and when we are delivering the product, we are delivering the product in February 2019. Okay, February 2020. So as we are delivering the product, so we are going to create the invoice. So we are going to create the invoice customer, we are going to actually invoice. So when we're delivering the product, the cost price of the product is actually, the product is sales, and then the price of the product, like XYZ, that is one, quantity is one, and the price is $20,000. But because, and this is like the, okay, the invoice number is 1001. Okay, and because we have received the advance, we have already, we have like, okay, so less advance received, okay, one, and then minus $10,000. So in actually we are creating this invoice for $10,000 because that's what the customer is going to pay us. Okay, so save. We're going to create this. Okay, so this invoice date is not correct. This invoice date will be in 2020 February. In 2020 February, let's say February 20th. Okay, so we're going to save this invoice there. Okay, now the invoice is going to, how the invoice is, you can see the invoice, like if you see the invoice, this invoice will look like this. So the customer can see that, okay, like the price is $20,000. Okay, so the sales $20,000, and then advance received, less advance, like advance received, okay, so is $10,000. So this is, the customer is going to see that. And once the customer, so once the customer is going to pay you immediately, right? So the customer is going to pay you immediately, and then in the checking account, and you're going to receive the payment, let's say 20th 28th of February of 2020. Okay, on this date. Okay, now the balance sheet. Now instead of all dates, I'm going to say last year. So last year the balance sheet is looking like this. We have in the checking account, we have $10,000, and we have, like, this is, and also we have the liability of $10,000, right? Now this year, okay, this year how the balance sheet is look like. Okay, so this year, and like this year how the balance sheet is looking like. We don't have any liability. Okay, we have $20,000 as in our checking account, and that's our asset, and we do have no liability. Okay, no liability there. Now the profit and loss, so like last year, even though we created two invoice last year, so last year profit and loss, okay, there is nothing in the profit and loss, nothing in income statement, right? But this year we have the $20,000 is as income. So this is how you need to make these transactions or the workaround for if you're receiving like advance payment from the customer, and then you do not want any journal entry to be created, but you just want the invoice and the income to be recognized whenever the final delivery is being made. So this is what you need to do. Okay, subscribe to my channel to get more updates or more tips on cloud bookkeeping, QuickBooks Zero, and yeah, and then I'll post more videos on this, on more tips, and let me know through the comment section. Let me know if you have any question or concern, and I'll answer them. Thank you very much.